So today I will cover about 14-15 charts which I found during last week. So I'll share one by one, and the webinar may go over more than 30 minutes, maybe 45 minutes. So the first one is the PM chart. Philip Morris. So I will show you the same theme in each chart, and then it's a common sense and a high probability and low risk. So once you look at the chart and the logic, you will say, yeah, it makes sense. So in this Philip Morris on 16th of May, last week or 10 days ago, do you see Philip Morris had a support at 110? If you look at this candle, 110 support, and previously it bounced from 110. So if you were watching PM coming down to 110, here's the support. So you see this, if you draw the line, you can draw the line like this, 110. So it bounced up. So this may not be your buy signal. So you say, no, this is not my buy signal. Oh, where is my mouse? Okay. So, but you wait for next day. Next day, you can go long, but still you think, okay, maybe this 50-day moving average is the resistance and it will not cross. Then the third day at 112 is long, but still you think, okay, it needs to cross 113. My mouse moves over. It needs to cross 113, and then I will go long. So here's a clear buy signal. But the aggressive entry was at 110. So next day, look at what happened. If you spotted either at 110 or 112 or crossing of 113, this is the buy signal. And then the target is way above. If you extend this line, it's like 118, 119. So next day, see how it moved up? So your exit was here. Your exit was here, because you don't know what it will do based on this line. It could have come down. So I would have exited right here at 118, 118.50, but it crossed the resistance line. My gardener is back. Okay, so the next chart. Next chart is WHR. In the previous webinar, I was showing you the resistance of WHR based on this candle here around 188. So it was having a hard time at 188. Even this was a fake move. Aggressive up move was a fake from 182 all the way to 187.50 was a fake move. And next day it gapped down and then gapped down. So when the stock gaps down on a 50-day moving average and holds, that is your very aggressive entry same day. There's another support. If this is a support, then you try to say, okay, what is the another support below this support? So here is your 200-day moving average support. So the support is this zone right here between 50-day and 200-day moving average. So let's say you didn't want to go long at this range, at this price. So you wait next day to see what it does. You see next 2 days how WHR went up. So this was your aggressive entry right here. But next day it gapped up, then moved up. So it's going back after filling the gap. It's going back at this level. And here is your, again, here is your resistance, this zone. So right, yeah. So this is what WHR is doing. Gap down, 50-day moving average. This is your support zone. This is your support zone, and next 3-4 days it went up. So the logic is saying that it will continue, and probably it will take out this 187, 188 move resistance. When this moves, breaks this resistance, it will go higher. But right now it's a long. So it's all common sense. 50-day moving average, gap down, holds, next day you go long. UNH. If you look at UNH, it broke this 50-day moving average. So it broke the 50-day moving average. So probably you will say, okay, this is a short, but then this was not this was a fake move. So breaking the 50-day moving average was fake. Next day it tried to move up, it failed, but it closed below 50-day moving average. So it's right there. But the next day, you see this candle, this is the buy, crossing of 50-day moving average. Here is your support, and see what happened again at 50-day moving average. Move up, right? So now your target is this line, trend line, around 178. So if you extend, it's going to 178. You see 178 cross. So now UNH is sitting right at the support. So any move above, chances are that it will move higher. If you remember the Apple chart, it was the same kind of chart I showed you at 120 level. No, not 120, 150 level Apple, and then it moved up. So same thing. It's right now it's just UNH is just resting. So the entry was right here, and this is where the exit. Tesla. We've been discussing Tesla for a long time. Tesla has a resistance. I was telling you that Tesla has a resistance around 328, 330 level. It keeps banging his head this line, and this was the support at 310. So anytime the trend line breaks, people go short if it's breaking down, or if it's going up, they go long. But the trend line break can be fake. So you have to know, you have to be cautious when the stock is breaking the trend line. So it barely dips this 310. Someone may have gotten short, someone may have gotten long, thinking it's support or resistance. So there was no clear sign. Here's another support at 300 level. So if you try to go long around 305, 306, here's another support at 300 level. So next day, let's see what happened. So next day, it again tried to break the trend line, but it's way up. It's still above this low. So it's still not confirmed. And then here is a 300 support, and here is the 50-day moving average. So there's a lot of support here. So I was watching Tesla. There were some members who bought puts and made quick money. But I was watching Tesla to reverse to the upside based on this candle. So I was just saying, okay, when it will gonna reverse again above this trend line. So when it reverses, that's when I send you the trade for calls. So 309, next day it gapped up. It's still not a buy signal, clear buy signal. But this candle, this was the one where I was telling you via email that aggressive traders can go long today, but when it crosses 313, it will be aggressive entry. So this was the aggressive entry. I mean, conservative entry, 313. This was aggressive. So once it touched the 313 level, I send the alert to buy calls. And then my first target was 320, and next is again 328, 330. So it broke 3. Next day, we got out here 320, 321 when it was touching this level, because I wasn't sure what it will do. next day it gapped, I mean it moved up. So it's definitely in an uptrend, and if it breaks 328, 330 level, it will go higher. So we'll take another leg towards 350. And here is the support. Facebook fell about a few days back. I think on 18th of May. This chart was made on 18th of May. So this is 17th May candle. So Facebook fell towards 50-day moving average, and then it bounced. So this is another entry long for Facebook based off 50-day moving average. And this is where your stop is. If it breaks 50-day moving average and doesn't bounce back up, then it can come down. So this was the entry right here between this trend line and this 50-day moving average. So this was the first alert that Facebook can go up. So I sent alert, and after a few days Facebook traveled sideways, and we know that it bounced above 50-day moving average. Traveling sideways, it's going to go up. Chances are it's going to travel this way. So you see this on 25th of May. This was 24th of May. This is 25th of May going up. Then on 26th, it went on a sideway, 152. So it is headed above towards 160, 162. So if we extend this line, and when it touches this line, we need to exit, because it can drop again. It can drop like this. It can drop like this. So we know that we need to exit at 160, 162. So we just keep extending the line. I have started a 6-month coaching program. So if somebody is interested, they can send me email at noshi@financialmarketwizard.com. Caterpillar. Now again, look at this Caterpillar. Caterpillar filled the gap when it fell here at 97.50. So this was the gap from here to here. So you see it filled the gap, but this was not an entry. So, but this was an alert saying, okay, we have to watch Caterpillar. It can move. If it goes above 100, 150, then we need to go long. And this is the support, 97.50. So it gapped up on 19th of May. So it gapped up. Now, when it gapped up, we know that this is the resistance around 102, 102, 103. So if it crosses this level, there is no resistance. It will continue moving higher, except this level right here where it fell. So we went long in Caterpillar. We had cat calls, and we added more based on this candle. This is when I send you alert saying Caterpillar buy calls. I loaded up. I also mentioned that I bought a lot of cat calls. So this was the entry based on this. So you see now it's touching the resistance line. So this is where partial profit needs to be taken, because you don't know what will happen. So you have to lock some profit. But if it crosses above, then it's going up. So you see it crossed, and now if you extend this line, it's towards 112, 115. So Caterpillar is going up. So this was aggressive buy signal, but if you didn't go long, this was the long signal, gapping up. And when Caterpillar does its thing, I look at Deere, I look at CMI, I look at other corresponding stocks to see if there are other stocks which I can catch. So if they look better, then I buy that one. Otherwise, I follow CAT and CMI, Deere. These are the ones. So Caterpillar is going higher. It will break this level. This is a minor resistance. Well, you see how it pulled back after touching the same high. right? So this was the target I gave you, 106, based on this double top. So now if it breaks this, it's going higher, 112, 115. But the entry, I would go long when it pulls back towards 104 right here. So if it pulls back here and hold, then we go long again and 4 or 5 points up. Costco fell down to the you see, if you look at this low, the lowest low, recent lowest low around 137. If you extend the line, touch all the lows from this low to this mid-March low, then this is a trend line. But you see, it broke this line. This was the sell signal. But again, the trend line break can be fake. So we have to be careful. So next day, Costco reverse. So this, when the trend line is broken and then stock goes above the trend line, that's a solid, you can say, aggressive entry to go long. Break to the downside and then go to the upside. So this was the entry long, and then it held trend line here. It moved up 173. Then look at what happened. Continue up. Then it gapped up. I think it was earning. So it gapped up to 180. I was watching to see what it will do, and then it pulled back. So it's sitting right here at 178 at support. So this is a pullback. So we know now that 178 is the support. So if it's dwindled here on this level, we can go long. We can go long on Costco at 178, and then there's no resistance. It will continue going up towards maybe 185, 190. So here is the signal at 178 if it holds. Next one, BG. I discussed BG in the previous webinar, and I discussed again that how the BG played out. So in BG, people, some members made a lot of money. They had a call for $1.70 average, and they sold for $10, $11. So see this BG gap down, and gap down below 200-day moving average. So traders shorted. Maybe they went short this huge volume. But next day, look at what happened. Reverse. The low of the day was the open of the day, and the high when this chart was captured on 29th of June. No, not 29th of June, 4th of May. The high is, at this time, the high was, the close and the high was same, 69.72. So this was a clear aggressive entry on this day to go long. And I sent email saying BG is long, right? So next few days, 1, 2, 3, 4, 5, 6 trading sessions, it went on a sideway, just doing nothing, just resting at 200-day moving average. And then look at this, what happened. You see this candle, it came down, but it held the low, right? It held the low of this. It did not break. So BG was still long. If you went long on this day, your stop is below 66. As long as 66 is not broken, you are long. And the sideway pattern, so sideway pattern doing nothing, nothing. People knew something going up. Something is coming up. That's why they bought it. And you see what happened. It went to 81, 82. So it went to 82. And when the chart is captured, it's 80. So buying calls at this level and then selling at this level, I send you alert, many alert to take your profit. So some members had $60. One member had 43 contracts. Bill had 43 contracts. So now the problem is when the stock is moving up like this, aggressive, you have to switch your chart to the 5-minute chart to see where if there's a pullback coming. You have to come up with your entry and exit based on the lowest time frame when the stock is moving. There's no time to ask anybody, what should I do? Should I get out? Should I not get out? If the stock is, this move was in like within 5-10 minutes, went up crazy, and the spread of the calls was like $1.50. So if you bought the calls at $1.60 and it's trading at 11 ask, and suppose the bid is at 10, so do you really care that the bid is 10 and 11 is the ask? There's a $1 spread. Should I sell or not? You bought it right here. So you just, when I get a cash like this, I sell close to the bid, so not close to the ask. So if it's 11 or 10, I sell at 10.20, 10.30. I don't mind even selling at 9, because I bought it at $1.50, $1.60, and I'm selling it at 9, 10. So I don't ask questions. I just sell. And if you're running out of time, suppose you have a expiry coming up, you can sell and then buy next month when it stabilizes. But I wouldn't buy BG again because of this move from 66 to 82. So think about this. Someone bought at 66, 67, 70, and they sold at 82. And if you are buying at 82, you are way behind them. So this move is over. BABA. So BABA right now is a short. If it crosses this line, it would be a long, and it stays above 125. So if you draw the trend line from this high all the way, you see how it spiked up but pulled back and closed below. Then it tried again to conquer this line, but it failed. Then it came down. So this was a short signal for me. I still have puts in BABA, and as long as it stays below, it can come down here. So right now BABA is not a long, but anything can happen. It can reverse. Let's see. So BABA next day fell down towards 122, but I think it's right here somewhere, 123, 124 right now. So it's attempting to break. ADP, this is another chart I showed you during last webinar. I'm showing again, and I mentioned that how it is set up to go long. So this chart was captured on 8th of May. So ADP fell on 200-day moving average. So this is your aggressive entry. If it fell and it held, you can go long. This is your stop. 95 is your stop. So next 2 days it tried to rally up, but it failed. So this is just a second. Oh, so this is the level where we bought puts, and I was watching for 95.40, this level, and when it touched this, came close, I sent the alert to sell the puts and close the trade, because I was I knew that it can hold this 200-day moving average. 200-day moving average is very strong support. So now see how the trade developed. ADP went sideways. It never broke this 200-day moving average. So your long aggressive entry, it was on this day when it held 200-day moving average. So I'm sure there is algo going on where automatic buying occurs whenever the stock comes closer to 200-day moving average. They start buying, and they buy, and then they lift it up. Then again it came close to 200-day moving average. Okay, buy again. Then came again closer. Okay, buy again. And then see these 2 days it started moving up. This was one of your exit. But if it breaks, it's going higher, and you see how ADP went up. So 200-day moving average held. It never broke. This was your aggressive entry. to make a fortune. Keep the stop here. You can buy like 100 shares or 200 shares, very low amount, but when you see the trade developing, you can add to your position. 100 again, then another 100 and 50, 40, whatever is your buying power. You start with the minimum at this level. Anytime it holds, you buy, add to your position, and then you see 101. So from 95 to 101, so 6 points gain, and who knows, it continues up. So this is the logic. NTAP. So NTAP, this is a bullish candle. 39 is the support. And if it breaks this line, trend line resistance, it's going to go up to 44, 45. So anytime it crosses the 41 level, it will go higher. So NTAP, you can watch for long. UNP. We had UNP, and this was a break, right, of the line. So you could have gotten out, you know, bailed out because of this big red candle. But again, this was the climax. After this, it went sideways, held 50-day moving average. You see, 50-day moving average is like holding its hand. Anytime it goes below 50-day, it goes up, goes down, then goes up, goes down, then goes up. So you could accumulate a little bit, 1 contract, 2 contract, 3 contract. Whenever you see close above 50-day moving average, you add another contract, 2 contract. Then you know, okay, this is the resistance. If it breaks this, then it's gonna go higher. There's no resistance here, all the way to 114. So 110. So now it held this 50-day moving average at 107, kept holding. Now it broke to 110, and I think it went to higher level. So it's going. If it's not, then it's going to 114. So the path is to the upside towards 114. So 114 is the level right here, and this was your entry. So anytime you see 50-day moving average holding, you add contract. Dip below, go above, buy 1 or 2, then buy 1 or 2. You don't need to buy like 50 contract right there. You don't have to. Just every day watch, add a little bit. Every day add a little bit, add a little bit. And this is your stop right here around 103, 105. So this is your 105 stop. This was your, 106, 105 is your entry. Little bit. 110 is going to 114. So that's where you need to exit. The next one, SPLK. This chart was captured on 26, like I think on Friday. So SPLK gap down. So I was watching to see what SPLK will do. So you see there are 2 support. This from the recent lowest low point, it crossed, it dipped below, but it crossed and closed above. And it closed just below 50-day moving average. Tried to break, but it has closed below. So this is your support level. So next 2-3 days, you have to watch SPLK, and if it holds this line, you buy 1 or 2 contract, then you buy another 1 or 2 contract, and it should not violate this level. This is your aggressive entry. It's a solid hammer right here. So you keep accumulating, and then it will come up and fill the gap towards 65, 66. So you can buy at 61, 62, 63, and sell at 66. So I will watch for the entry. DEC gapped up last Friday. I took the screenshot. So I was watching what DEC will do. So it gapped up, broke this line, this resistance this resistance to the downside. So I was watching what it's going to do, because it's always, most of the time, it's a fake down move. So I was saying, okay, should I buy puts or not? If I buy puts, I get out here. But then it's at 64, it came down here, and then it closed above. So if DEC stays at 65, 66, it's a long. It should go up, not down. But preferably 60, 61 is the, I mean, good entry point right here. So this gap up and then move down was a fake move down. Abbott. So Abbott, we bought calls. So I bought calls based on this resistance line broken to the upside, and if it breaks 44.50, 45, it's going to a higher level. There's no resistance here, except right here I need to watch 45.50. So at 45.50, we can watch the chart and see what it's doing. If it breaks, then it's going higher. If it's not, then we sell, because we bought it at 44. So 45.50, we will have good profit here. But if it breaks, then it's going towards 50. Disney. I think Disney is the last chart. So again, Disney, from the low of mid-October, it held this resistance line, in the support line. So it dipped, but it closed above. Then it's just hugging this line. So this looks to me a buy signal. Keep touching, moving up. So where it will go? The chances are it's going to 112 level right here. So this is the exit point, 112. So from 108, 112, 4-point profit right here. This is the profit level right here. Your exit is, if it breaks this line, this could be a fake break. This is your support right here. Right here is the support. So even if it breaks this line, it's not a exit signal till it breaks here. So in fact, if it breaks and then reverses up, I buy more calls and sell at 112. So it's a matter of time. So this is it, 35 minutes. So again, I have a 6-month coaching program. If someone interested, please send me email. And if you have any other question, please send me another email to my email address and I will answer. Thank you.